technology is still the dominant leadership area of the market, and same with the commodities and precious metals. It's really where the growth in the engine is. So at this point, we're basically looking at any kind of pullback as being normal, potentially even a buying opportunity for some investors who haven't been in the space or haven't been participating in it as much. But it definitely makes for an interesting dynamic here. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. We're back. It is Thursday today. We're doing an advanced recording here just because markets have been little bit bumpy, a little bit turbulent, volatile out there to say the least over the last week or so. How you doing over there, Greg? What's going on? What's happening today?
Yeah, no, everything's good on mine. I think more the question, how are things on your end? I hear the hockey schedule has been picking up. There's some, I don't know if we mentioned this last time, there's some early morning practices that are coming into the schedule. So it sounds like that's ramping right up for you guys.
Keep it busy. A lot of hockey. We got a tournament this weekend. We got a travel tournament this weekend. We've got early mornings. We got a full complement. So that's keeping me busy. I'm probably going to be fielding phone calls and emails from the tournament, but no, it should be good fun. We're headed to Niagara Falls, so first travel tournament of the season. So looking forward to that. Should be some good fun.
First travel tournament of many, I would predict, based on what's going on here. It sounds like, Connor, like every day you guys got hockey, at whether it's in the morning or afternoon or night.
Feels that way. I think we're up to more than a couple days a week. That's for sure. I think the schedule varies based on the week and how many games in that, but it's at least probably three times a week at this point. So it's keeping us busy for sure. We got a game tonight as well.
No shortage of hockey. Well, I know the practices are in the morning. So if anyone gets an email from Will at 6 or 6:30, just know he's probably at an ice rink. So prepare yourselves.
Oh, it's good. It's good fun. But yeah, looking forward to diving in today here. Obviously, a more volatile week, and I think this is the first time we've seen some turbulence and a pullback here out of markets for quite some time. Probably really the only time recently was back in October where markets started to hit some wins, but before that it was really April and the whole tariff crash and liquidation day that happened in April of 2025. So it's been a few months. It's been pretty smooth sailing in markets, and now we're starting to see headwinds come in from a few different places. So wanted to talk about that, unpack kind of what's going on, because we've seen that things are just picking up in terms of market turbulence, and looking forward to diving into this today.
Yeah, and to your point, Will, we're getting a little bit of volatility, but nothing that we're not expecting. Like 2025 was a pretty strong year. Obviously, it was a good start to 2026. So for us to get some headwinds coming into the market, not anything we're not expecting. But just to get a sense, Will, like what are you seeing? Because there are some different areas, different pockets that are showing a little bit of weakness. But what are you kind of seeing from your perspective?
Yeah, I mean, it's starting to become a little bit more broad-based, but I think the specific things that have driven this over the last few days or week or so. So one is technology and AI and software, and then the other is gold and precious metals. And last Friday, we touched on that a little bit. We had filmed it Friday morning, and then by the time Friday ended, that was a pretty rough day in markets for sure, but you were seeing that trend, so to speak, continue, some of that volatility, which of course always presents opportunity and risk when we see this coming in. But maybe we'll dive into the tech one and the AI one first to sort of explain that, because that's probably a little bit more recent, or what's happening in the last day or two.
Yeah, and there's been with tech, and I think we touched on this last week, you're kind of seeing there's kind of two parts to tech. There's more the hardware side of things. There's more of the software side of things. But what you're starting to see is a lot of the software names have started to pull back. And we've talked about this, that if you're not really seen as like a AI player, the market is, kind of punishing you to a degree. And we've seen that a little bit with some of the earnings from some of these bigger companies that have come out, kind of pulling back on that basis.
Yeah, I think that's what has started this. Is there's AI related news coming out that some companies are kind of going to have their lunch potentially eaten by AI, and so the whole what feels like every software name is getting dragged down because AI comes in, it's disruptive, it replaces what these businesses do. And we've seen that just ripple through the whole space. We also saw, I think it was yesterday, that the semiconductors and those sort of AI, more infrastructure related names started to get pulled back. So I think this is a risk that we've talked about for some time, that the whole tech space, the whole AI space, like, it has had incredible run, especially coming off of 2022. There's some bubble like characteristics out of the market, and when you start to see concerns about whole businesses going under because of the disruption of AI, also concerns around how much these companies are spending on AI in terms of capex, that's just starting to spook the market, and you're seeing this whole risk off sentiment come in. The other thing too, I mean, just the whole tech complex relating to what happened on Friday with a new Fed chairman is sort of another piece, a more macro piece to the story, but ties in with gold, which we'll dive into a little bit later. But market at least sees or is interpreting the new Fed chairman as being more hawkish, less inclined to bring rates down to to zero or down significantly. And so you've seen that little bit of unwinding there, because if it's not an environment where rates are going down or going down as fast as expected, that tends to be bad for tech stocks, or at least a headwind. So I think you got the last few days, you have a few forces coming together that are adding risk into the markets. But this kind of divergence in AI or technology and separating out the winners and the losers is a big one. But it also seems like it's really just a whole risk off sentiment. And some of that would have to do with just concerns around how much further can the tech space and AI go? Is this a bubble? How much are companies spending on this? So the whole complex is showing some signs of uncertainty. And I mean, one of the things that we did do in our portfolio, and this goes back a few months, is we had lightened up some of the tech and technology exposure. And so we're not, we want to be in that, but we're not overly positioned or overly exposed to technology, which is good, and had lightened that up and reallocated to some other areas.
Is it fair to say that you think some of the froth is maybe coming out of some of the tech names that have run up, and maybe a little bit of a repricing, given that the new Fed chairs come in, and to your point, rates might not be going as low as maybe some people originally thought?
Yeah, I mean, when things run up as far and as fast as they have, there's going to be shorter term investors, traders, all sorts of different people coming in and shifting things around and creating volatility, whether it's computers and algorithms and day traders and all these things. It's just the environment is that when things are going up and they're flying, investors are going to come in, they're going to take profits. There's also short sellers. There's all sorts of factors that do that. So it's a lot that's going on there. But the reality is, in tech, we're just seeing that increased volatility. We're seeing some downside out of these names for sure. And it's something, on our end, we're continuing to manage and monitor and keeping an eye on. And going back, a few months ago, we lightened up that exposure, really focused on it tends to be some more high quality names and high quality positions in that space. But when you do get risk across the whole sector, it's not going to insulate you from anything. I mean, I tend to think that higher quality names, yes, semiconductors are in a really good position they're really acting as the kind of the plumbing, the infrastructure of this whole AI piece, but they're certainly not immune from volatility. So when things have gone up and have had a nice run, they tend to revert to the mean, and they tend to pull back. It doesn't mean that the whole tech trade is over and done. It just means there's some new dynamics developing, including this one about software companies specifically starting to get punished or beat up, or if companies are coming and reporting earnings that maybe don't meet expectations, they'll get punished as well. So we're definitely seeing a changing technology and AI complex here.
Yeah, not that we own these names directly, but within the last week or so, like we saw Salesforce, PayPal, like AMD, more or less tank after earnings just because they weren't up to market's expectations or analyst expectations. So you're seeing that kind of ripple through the whole tech space altogether.
And we're watching it. I mean, we're looking at moves at this point to see if shifts and changes make sense in the portfolio with our tactical and technical process. But at this point, really just watching the complex, watching what's going on, and see how things are changing. And my sense is here, when you get kind of heightened volatility, VIX is starting to spike. A lot of the very short term, like day traders, algorithms, computer based stuff starts to step in, and you see stuff will get chopped down quickly in a day, rise up quickly in a day. We just have enhanced volatility, so it's sort of like stormier waters here for sure. With not necessarily fun to be dealing with as an investor. If we look like we've got bags under our eyes for the last little while, that's probably
Yeah.
probably why, trying to make sense of what's going on. But it happens. I mean, this happens pretty regularly in markets, and I find in general these things tend to move a lot faster. Like, they'll happen faster. They also recover faster. Just the speed and the technology that everybody's trading at. So we're certainly looking at things, keeping an eye on things to see if there's moves that make sense or any shifts and adjustments in the portfolio. And the other big one that probably goes back about a week now, but the gold trade we're seeing, or the precious metals trade in general, we're starting to see some heightened volatility there, to say the least.
Yeah, and with gold, we've talked about how gold has kind of continued to show a lot of strength and leadership. It seems like, and I'd be interested to get your take, Will, like within the last week or so, kind of similar reasons with tech, like maybe interest rates won't go down as much, maybe a little bit of a stronger US dollar, but it almost just seems like some of that froth has kind of been trimmed from the top.
Yeah, I mean, gold and precious metals were just running wild, basically, in January. So they had gone up. I mean, the positions, like gold positions, gold equities, silver was the other one that's making headlines, but those were just up massively. And so when things start to go parabolic like that, or out of control, it's probably not. They're probably not going to come back to a soft and smooth landing when they go up that far and that fast. They then come back and settle down at a reasonable level. So a lot of that had to do with Fed chairman, more hawkish, the idea that seen as maybe rates not coming down. I mean, the reality is interest rates, didn't matter who the Fed chairman is, interest rates are going down in the U.S. That's something to remember from a big picture. Is some of this is shorter term stuff. The whole tech complex as well, the whole AI complex, is ultimately driving much of the growth, or a huge part of the growth in the US and the global economy. So yes, there's going to be volatility in there, but US economy keeps growing. That's great. I mean, the way the Fed chairman set up is that it doesn't really matter who it is, based on the rhetoric we're hearing, is that rates are going to go down. So, I mean, I don't really think that trajectory changes. What we've seen as well is that the U.S. seems to be fine. The administration, Trump, seems to be fine with a weaker U.S. dollar. So although we got some headwinds there on that, and a strengthening dollar, that will be good for gold. So, I mean, I think the case on these from a big picture, a macro standpoint, is still very much intact. It's just that they were running too hot, whether it's technology, whether it's gold, other parts of the market. I would stress, though, that from our perspective, although, yeah, they're getting beat up a little bit here, and more volatile, technology is still the dominant leadership area of the market. And same with the commodities and precious metals. It's really where the growth in the engine is. So at this point, we're basically looking at any kind of pullback as being normal, potentially even a buying opportunity for some investors who haven't been in the space, or haven't been participating in it as much. But it definitely makes for an interesting dynamic here.
Well, so there's obviously some short-term headwinds coming in with tech and gold, but kind of to your point, how is like the longer-term case looking? Is it still kind of intact when we look at it from our more technical lens?
Yeah, I mean, that doesn't like really things have not actually changed that much at this point. Tech stocks going through a little bit of pullback or sell off or commodity stocks as well. It's not changing the fact that these are again the longer term, medium term dominant players in this market overall. I think those broader just macro cases about where the growth engine from tech stocks is coming and what's going on with commodity stocks as well and gold as an asset class. I really don't think that changes either. So from a longer term perspective, not that much is changing. I know from a shorter term perspective, for anyone who's looking at markets day to day and looking at portfolio values, it's not fun to see these pullbacks. I mean, it never is, but I really don't think the macro case has changed, at least at this point. But obviously situations develop, things change, the world, the markets are constantly changing. And part of our process, our strategy here is we'll adapt and change the portfolio based on changing market conditions. So that's really what we're starting to see now. We're starting to see at least the beginnings of some changing market condition, but we're certainly managing that closely, keeping a close eye on things, and we'll shift and adjust accordingly.
Yeah, and the one thing I'd mention, well, you mentioned kind of in the fall of 2025, but also the spring of 2025, when you have this volatility, from what we've seen, it actually presents some pretty good opportunities. So that's just one thing for investors to keep in mind is that in order to get the opportunity, you need to kind of go through a little bit of volatility, which is what we're going through now.
It's never fun when things are going the wrong way or going through a pullback, but that's exactly right. I mean, we had our fair share of bad days out of the market through April and spring of last year, and what we eventually saw was just a massive rally and massive growth that came out of the markets in general, and especially there were plenty of areas that doubled off that low, and things like the technology stocks, the semiconductors, all the themes we've talked about, precious metals, base metals, defense, all sorts of areas of the market did incredibly well. So for those to lose some steam, pull back a little bit, that's normal and natural. Absolutely. When we have the adversity, these pullbacks, these sell-offs, they present the absolute best opportunities for either deploying cash, putting money to work, also opportunities for rotations out of some pockets and areas of the market into others. So that's the lens that we work to look at it through, is looking at the opportunity, looking to capitalize on it for investors, making sure we're in the right pockets and navigating through things. So interesting times, interesting markets to say the least here.
Yeah, and the one thing I'll just mention as well is you obviously had the big sell-off in the spring of 2025. You saw a big rally, but even when we had a smaller volatility in the fall, you still had a pretty good November, December, and January. So
yeah,
the point is, even a little bit of volatility can present strong opportunity.
Oh yeah. So look, we want you to be wealthy. We want your portfolio moving in the right direction, growing. We want to be managing the risk, preserving capital here for you in these markets. We want you to feel wealthy. We don't want you constantly worrying about all the day to day and ups and downs, because we're managing this, we're steering through this. Whatever's going on, big, small, doesn't really matter. We're on top of it. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. And we'll be back. We'll be back talking with everybody soon. And have a great weekend.
Great weekend.